Most traders think journaling is boring. They think it's optional. They think it's something disciplined traders do after they're already profitable. That belief alone explains why most traders stay broke. Because journaling isn't a productivity habit. It's not a motivational tool. It's not even about improving strategy. Journaling is psychological exposure therapy, and beginners avoid it for the same reason people avoid mirrors when they hate who they see. Let's get uncomfortable. When you place a trade, you feel powerful. You feel active. You feel like you're doing something. When you journal a trade, you feel exposed. You feel small. You feel accountable. Trading feeds the ego. Journaling threatens it. That's the real reason beginners never journal. Not because they don't have time, not because they don't know how, not because it's complicated. They don't journal because writing forces truth, and truth destroys the fantasy they're addicted to. The fantasy that they're almost there. The fantasy that losses are just bad luck. The fantasy that one big win will fix everything. The fantasy that the market is the problem. A journal doesn't care about your excuses. It records patterns. And patterns don't lie. That's terrifying. Because once your behavior is written down, you can't unsee it. You can't pretend you didn't revenge trade. You can't deny you entered out of boredom. You can't say, this one was different for the 47th time. The journal remembers everything you try to forget. That's why beginners avoid it. They'd rather lose money than lose identity. Here's the brutal truth most trading gurus won't tell you. You are not losing because of strategy. You are losing because you repeat the same emotional decisions again and again. And repetition is invisible without records. Memory lies. Emotion edits history. The brain protects the ego. Your journal does none of that. It shows you who you actually are when money is on the line. Not who you think you are, not who you want to be, who you become under pressure. Most traders don't want growth. They want validation. They want to feel smart. They want to feel special. They want to feel like they're different from the rest. Journaling destroys that illusion. Because when you look back over 50 trades and see the same mistake repeated in different outfits, the fantasy dies, and the ego hates death. Let's talk about what journaling really does. It slows you down. That alone makes beginners uncomfortable. Most beginner traders are addicted to speed. Fast entries, fast exits, fast dopamine. They confuse movement with progress. Journaling forces you to pause, to reflect, to replay the moment you clicked buy or sell. And in that pause, something dangerous happens. You start noticing motives, not reasons. Motives. I was afraid of missing out. I was bored. I was angry after a loss. I wanted to get back to break even. I didn't trust my plan. That level of honesty hurts. Because now the problem isn't the market, it's you, and responsibility is heavy. That's why beginners say things like, I'll journal later. I already know my mistakes. I don't need to write it down. I'll start journaling once I'm consistent. That's like saying, I'll go to the gym once I'm already fit. The journal is not a reward, it's the work. And work is boring compared to hope. Hope is addictive. Hope says, next trade will be different. The journal says, you've said that before. Hope keeps beginners alive. The journal kills hope and replaces it with data. And data doesn't care about dreams. Here's something most traders don't realize. Every unjournaled trade is a lost lesson. Every forgotten loss is a repeated mistake waiting to happen again. Every win you don't analyze teaches you nothing. So beginners repeat the same cycle. They trade, they lose, they feel pain, they avoid looking at it, they trade again. Pain without reflection creates trauma, not wisdom. That's why so many traders are emotionally unstable. Overreacting, overtrading, over-leveraging. They're carrying unprocessed losses. Journaling is emotional processing. It's therapy without a couch. And therapy is avoided by people who don't want to face themselves. Let's go deeper. Beginner traders don't journal because journaling removes their favorite weapon, denial. Denial sounds like, I almost had it. It was just spread. My stop was too tight. If I held a bit longer, if news didn't come out, the journal responds with silence and numbers. Entry, stop, exit, reason, emotion, result, cold, unemotional, unforgiving. It exposes the gap between plan and execution. And that gap is where most traders die. Because strategies fail in execution, not on paper. You can have the best setup in the world. If you don't trust it, hesitate, chase, or exit early, it means nothing. The journal captures that sabotage. It shows you how often you don't follow your own rules, how often you break them and justify it, how often your confidence disappears at the worst moment. That's not market knowledge, that's self-knowledge. And self-knowledge is dangerous. Because once you know you're responsible, you can't say, I didn't know anymore. That's why beginners prefer ignorance. Ignorance keeps the dream alive. The dream that they're one strategy away, one indicator away, one mentor away. The journal reveals the uncomfortable truth. You are not undisciplined because you don't know what to do. You are undisciplined because emotions hijack you. And until you see how and when that happens, nothing changes. Let's talk about pain. Losses hurt, but unexamined losses hurt longer. When you journal properly, you relive the loss. You revisit the decision. You feel the discomfort again. That's why people avoid it. But pain processed becomes wisdom. Pain avoided becomes fear. That's why beginner traders get more fearful over time instead of more confident. They're stacking unprocessed experiences. The journal is where fear goes to die. Because when you see the same loss pattern 20 times, fear turns into clarity. You stop fearing the market. You start fearing your behavior. And that's a good thing. Here's another reason beginners don't journal. It removes the illusion of randomness. They love believing losses are random because randomness means no control, and no control means no responsibility. The journal shows clusters, patterns, triggers, losses after poor sleep, losses after revenge trading, losses when increasing size, losses when trading outside plan. Now it's not random anymore. It's behavioral, and behavior can be changed. That's terrifying to someone who secretly enjoys blaming external things. Let's be honest, many traders don't actually want to be profitable. They want to be right. They want to feel superior. They want to tell stories. Journaling doesn't care about stories. It cares about results. It humbles you. And beginners hate humility. They're still in the phase where confidence comes from belief, not proof. The journal demands proof. It asks, where's the edge? Where's the consistency? Where's the improvement? And when the answers are uncomfortable, most people quit journaling instead of fixing behavior. That's why journaling separates real traders from gamblers. Gamblers hate records. Casinos love when players don't track losses. The market works the same way. If you don't track yourself, the market will eat you quietly. Here's the darkest part. Journaling doesn't just show bad trades. It shows who you are when nobody is watching. Your impatience, your greed, your fear of being wrong, your need to feel something, your addiction to action. Trading magnifies personality flaws. The journal documents them. That's why beginners avoid it. Because deep down, they're afraid of what they'll discover. That they're not disciplined, that they're emotional, that they're impulsive, that they don't trust themselves, and that realization hurts more than losing money. But here's the paradox. The traders who finally commit to journaling don't become profitable because they journal. They become profitable because journaling forces them to stop lying to themselves. And self-honesty is the rarest edge in trading. Once you journal consistently, something strange happens. You trade less. You think more. You respect your plan. You fear mistakes more than missed trades. Not because someone told you to, because you've seen the cost of your behavior in black and white. You don't need motivation anymore. You have evidence. That's why journaling feels boring at first. Boring means emotional regulation. Boring means consistency. Boring means survival. The market doesn't reward excitement. It rewards restraint. And restraint is built in reflection, not in action. So if you're a beginner trader avoiding journaling, ask yourself this. What are you protecting? Your time or your ego? Because the journal isn't judging you. It's revealing you. And until you're willing to face that reflection, you're not trading the market. You're trading yourself and losing. But let's push this further because the most dangerous part of avoiding journaling hasn't even been touched yet. When you don't journal, time starts lying to you. Weeks pass, months pass, trades blur together, losses fade, wins get exaggerated. You start feeling like you're improving without actually improving. This is one of the darkest traps in trading psychology. Progress without proof is delusion, and delusion feels good. It's warm, comforting, reassuring. It tells you you're learning. You're getting better. You just need more screen time. Meanwhile, your account balance is telling a completely different story. The journal is the only thing that anchors time to reality. Without it, you can trade for 2 years and still be at the same psychological level as month 1. Same mistakes, same reactions, same excuses, just more scars. That's why some traders have 10 years of experience and still trade like beginners. Because experience without reflection doesn't mature you. It just hardens your bad habits. Journaling is what turns experience into intelligence. Now let's talk about identity. Beginner traders often secretly identify as potential winners. Not winners, potential winners. They love that identity because it doesn't require proof, only belief. The journal threatens that identity because once you write things down, you're no longer potential, you're measurable. And measurable means exposed. Your R to R is exposed. Your win rate is exposed. Your discipline is exposed. Your patience is exposed. You're no longer hiding behind "I'm learning." You're confronted with "this is who I am right now." Most people would rather cling to a fantasy version of themselves than face the real one. That's why journaling feels heavy. It collapses the distance between who you think you are and who you actually are. And that gap hurts. Here's another reason beginners don't journal. It removes emotional amnesia. After a big loss, the mind wants to forget. After a big win, the mind wants to rewrite. Losses get minimized, wins get mythologized. I knew it would work. I trusted my instinct. I saw it coming. The journal says, no, you didn't. You hesitated. You broke rules. You got lucky. That's humiliating. But humiliation is a teacher. The market doesn't care about your confidence. It cares about your consistency. And consistency is impossible without memory. Your brain is not designed to store accurate trading history. It's designed to protect you from pain. That's why traders repeat mistakes, because the pain fades faster than the lesson. The journal keeps pain alive just long enough to extract wisdom. Now let's talk about discipline. Most beginners think discipline means forcing yourself to follow rules. That's wrong. Discipline is what happens when consequences are clear. When you see that every time you trade tired, you lose. When you see that every time you size up, your execution collapses. When you see that boredom trades drain your account slowly, you stop doing those things. Not because you're strong, but because you're aware. Journaling doesn't build discipline through willpower. It builds discipline through awareness. And awareness is terrifying before it becomes empowering. Because at first it shows you how much control you don't have, how easily emotions hijack you, how fragile your confidence is, how often you lie to yourself in the moment. That's why beginners avoid journaling. They don't want to see how weak they feel under pressure. But here's the secret. Every trader feels that way. The difference is who's willing to admit it. Professional traders don't journal because they're confident. They're confident because they journaled through their insecurity. Now let's get darker. When you don't journal, you slowly develop learned helplessness. You start believing the market is unpredictable, that nothing works, that profitability is luck. Why? Because without records, losses feel random, and randomness kills motivation. The journal restores cause and effect. It shows you, when I follow my plan, outcomes stabilize. When I don't, chaos appears. That restores agency, and agency is power. Without it, traders spiral. They overtrade. They gamble. They chase signals. They look for saviors, mentors, indicators, strategies, telegram groups, anything to avoid looking inward. Journaling ends the search for saviors because it proves the problem isn't missing information. It's missing self-control. That realization is brutal, but it's also freeing because once the enemy is internal, it's manageable. External enemies feel unbeatable. Internal ones can be trained. Now think about this. Why do casinos give free drinks? Why do apps hide spending history? Why do gamblers avoid checking totals? Because clarity reduces compulsion. The market works the same way. A trader without a journal is the perfect customer. Emotional, reactive, forgetful, hopeful. A trader with a journal is dangerous. They slow down, they question, they adapt. That's why journaling feels like resistance. Because it is. Resistance against impulsive behavior. Resistance against emotional trading. Resistance against fantasy. And resistance always feels uncomfortable at first. Here's the final truth most beginners don't want to hear. If you're not journaling, you're not serious. You're entertained. You're consuming content, watching charts, feeling productive. But you're not confronting yourself. And trading is not a strategy game. It's a self-mastery game disguised as numbers. The journal is the arena where that game is played. Every page asks, did you act according to plan? Did you respect risk? Did emotion lead or logic? So if you still hate journaling, good. That means it's working.